Ticker symbol Mullen touching down right at the target that we were talking about in the space call with Busy Brands and William P. Ferrand. Let's go ahead and go over the possibilities for the coming days. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with an MULN technicals, raw price action, and statistical threat of analysis on this happy Saturday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, you guys, so yes, we are looking at Mullen on the 5-day chart. In fact, I was looking at it on the daily chart from when I was on a space call with Busy Brands and William P, right? So we actually, Busy asked me, what are you seeing for Mullen, right? So I said the likelihood of touching 13 cents was pretty great. Of course, it's, it was a longer conversation than that, right? So, and it was in respects to the 4.618 top side of our golden mean, which is kind of why that target kind of stuck out. Another reason for us to kind of stop right at that 13-cent level is in respects to the 5-period EMA on the 5-day chart, right? So this is the EMA 5, and you can see that we actually came right at it, right? This is at, well, I mean, arguably this is at about 11 cents, and the target came up, and the price action came up to a high of, let's see, 13, right? So, which actually makes me feel that there could be the EMA 7 right at that area there. So the EMA 7, yeah, there we go. So 1249 is that EMA 7, very likely one of the reasons why we were able to be resisted, right? So this is traditional market hours, right? We're not seeing the price action unless we go to the 12-hour, which I'm not going to do on this chart because I am keeping track of certain metrics here on the 5-day, okay? So, yeah, let's go ahead and move on to the next chart to see what we have. Okay, so there are two different types of traders right now, okay? So, in fact, there is a lot of confluence actually happening. So, I mean, in particular, a very interesting set of fractals. Okay, so first of all, please notice that the declining volume here also matches the declining volume on this larger iteration triangle, right? So please just notice the shape of them, right? So we have that bottom side touch, right? We have that red candle here, followed by another green candle, followed by the liftoff, right? So we have that bottom touch here, followed by a green candle, followed by the liftoff. We have a pullback and then a continuation to the upside, pullback, continuation to the upside. And they're very, very similar in the structure as well. Okay, so this triangle here was actually giving us the potential upside of, well, guess where? The 13 cents, right? Right at that area that we were talking about. So let's just go ahead and show that, how that possibility was even so. So this is the falling wedge, right? So we can actually take a trend line from the top side of the triangle all the way to the bottom side of the triangle, and we can apply it to that area of breakout. So now you can see that upon this, actually it was suggesting right to the top of 1303, and the price action came up to a high of 13. Okay, so now the reason why I have drawn this, let me get rid of the ABCD. The reason why I drew this is because there is a potential that it could be starting a descending channel. But I mean, even my moderator Cal actually pointed out the potential of this being the start of an ascending channel as well, which is actually very it's absolutely possible, actually. So you would connect the lines like this right over here, and then that would be your starting point, right? So this would be the beginning of that ascending triangle. Nonetheless, both of them actually have some very, very similar targets to kind of look at here, right? So let me just go ahead and get rid of the ascending triangle and show you something else, okay? So yes, it came back down, I mean, perfectly in line with a lot of the candle touch points down here, right? And, well, let me just go ahead and move on to the next chart so I can show you what just how everything is playing out mathematically. Okay, so volatility versus momentum backtest here on the 12-hour chart. Okay, so what I did, I'll give you the context, right? So anytime that volatility has contracted to within the 15th percentile of volatility. This is BBWP, by the way, BBWP representing volatility. Anytime that we have contracted into those critical levels and started an expansion phase alongside an upside pivot with stochastic momentum, I have taken note of any time that that criteria has met. Particular to the upside thrust, the duration of the iteration. For example, here it was opening to high basis, right? So opening of the candle to range high of the candle. And it would be particular to the highest area that price action reached during that condition or during that criteria. So in this particular case, this was a 48.85% move to the upside over the span of about 9 days and 12 hours, right? So I have taken note of every single iteration's data, right, including the amount of times that the volatility versus momentum profile got the upside correct versus incorrect. Okay, so this is actually something I'm teaching my master students right now on how to do, right? So, by the way, actually, there's only about 3 or 4 seats left available. I guess this could be the last call for it. And the classes are going to be starting tomorrow tomorrow Sunday at about 5 p.m. Pacific. So if you do feel like enrolling, definitely reach out to me via the email located in the description below. Okay, so now that we know that we have all that data, right? These are all the samples throughout the entire trading history of the Mullen asset on the 12-hour chart, right? So just like this, so you can see all of my notes, right? So this is what I do, right? So now let's go over to the data set. So out of a total 40 iterations, 23 have been guessed correctly to the upside through the entire trading history, giving us an upside accuracy of 57.5%, meaning that whenever this criteria happens, we have a 57.5% chance that it would succeed to the upside, right? So that average upside thrust based on all of these iterations, we're getting a 47.05% over the span of about just under 6 days. Okay, so let's go in to the data, because what we can see here is that the signal already fired and the signal already made that move. But let's go ahead and take a look at what that means. Okay, so first of all, in order for us to get this signal fired, the condition must be that the moving average and the volatility component of the indicator must be beyond the 15th percentile with an upside pivot. Okay, so that condition is met, and also we absolutely need both of the 3-period and 14-period moving averages from the stochastic momentum pivoted towards that upside, of which you can see are there, right? So let's go ahead and apply the firing of the signal would officially be right at about here on this tiny candle there, right? So let me zoom in just a little bit just so you can see what I'm talking about, right? So meaning that the moment that volatility started coming out of this area, right? So right at about here is when we have an upside pivot touching that line and the outside of the volatility component, making this opening of the candle, which is 901. Let me just hover over it. There you go. You can see on the 901. That would be essentially the beginning of the firing of the signal. Okay, so now we apply 47.05% to the upside. Apologies, because this is 47.07, 45.07, right? But actually, let's just kind of correct that. I got a little bit of dyslexia there, right? So let's just go ahead and put 47.05% to the upside. And I think this is about as close as we're going to get, 47.08. This was suggesting a top side of 1324. Okay, so upon the firing of the signal right here, it was saying, okay, we have a 57% chance that we can hit 47.05% over the next 5 days. Okay, so in fact, what it ended up doing was meeting very close to that target. In fact, so you can just see here that we came up to 13. Let's see, what was the high of that? High of exactly 13 cents, right? And that was 40, there we go. Okay, 44.40% out of the 47.05% that we were talking about. Okay, so very, very impressive that it met exactly to the target that the statistical mean was suggesting, right? So the curious thing here is that we barely started that upside, and it's barely starting the contraction phase as well, which could be indicative of, guess what? Yeah, a continuation to the upside, even beyond the mean. And why could that be possible? Well, because in statistics, you have a first standard deviation. So I haven't calculated the first standard deviation, the lower end or the higher end of the first standard deviation. In fact, I haven't even calculated the standard deviation from the mean. Okay, so I can imagine that the mean could be at about 40%. I'm sorry, the standard deviation could be at about 40%. Now distributed from the 68% of the results in the center of a bell curve, the lower end of the first standard deviation could be at about 8% or 7% minimum, meaning that upon this criteria, we can make a minimum upside of about 7% with a 57.5% accuracy that it would make that upside. The upper end of the first standard deviation could be at about 80%, maybe around 90%, right around there. Okay, so I mean, it's just it's just statistics, right? That's just how I trade. I trade based on math. Okay, so we still have that signal towards the upside. Here's another curious thing. Please notice that as early as the buy hourly, we have an upside pivot with critical volatility reads, meaning that the earlier time frames are still suggesting upside. Let's move on to the 6 hour. Check out the 6 hour with a pivot straight to the upside. Expansion phase starting from that critical volatility, still with an upside here as well. Please remember that volatility is direction neutral. Okay, so only because this is upside doesn't mean we're going to the upside. We use momentum for that bias. Okay, let's go to the 8 hour. 8 hours still pivoted towards the upside with an upside pivot on stochastic momentum. Of course, we saw the 12 hour. And please remember that the price action happened after hours. So the daily time frame momentum indicators are still not flashed from that price action that happened. So come Monday at market open, we would likely see what happened with the daily and up time frames. But still, notice that the daily, even without that 13%, even without that 47% push, we still have an upside from the 3-day exponential and the 14-day simple, and we are at critical volatility too. By daily time frame, now we're starting to get the correction from the very short-term time frame EMA3, and we're making our way into critical contraction. So this is all indicative of like a domino effect. All of these shorter time frames are going to start collapsing into the larger ones, thus creating a bigger and bigger opportunity for an upside. I'm not sure why that can even be. I don't follow fundamentals whatsoever, right? So. And I'm noticing here 10 things you know about Mullens. Okay, well, I mean, there is some little news here and there, right, which could be Mullen surges on deal with. Okay, so here we go. So the price action happened on this. I don't even know how to pronounce it, right? Surges on deal with Lawrence Harge or whatever that is. So this could be one of those reasons that the price action is moving towards the upside, which is very curious because all of the statistics were already suggesting that upside move before this happened. Okay, so this is very, very good for the Mullen asset. Next thing, in the last part of the analysis here, please notice that we have two drives, actually we have a lot of drives actually, not just one. Here's another one, here's another one, here's another one, and another one over here. So what I'm looking at are drives of hidden bullish divergence, which usually happens, these are regular bullish divergence drives, right? When usually happens with momentum represented by the RSI in this case, making a series of higher lows while price action is making a series of lower lows. And that opposition of price action versus momentum is a divergence drive, right? Or a divergent drive. So I'm noticing, I'm just going to give you two primary drives of regular bullish divergence here, of which are absolutely fired and still suggesting an upside on the 12 hour. So let's just open up a multi-pane here, just like we always do, and see the probabilities for all of the time frames starting from the immediate short-term 30-minute. Okay, so the 30-minute time frame using that 14-day simple represented by that pink line, RSI signal purple line, right? Using that 14-day simple as a support, and actually now on an upward momentum, right? So please notice that the 4 hour is also on an upward pitch, getting very close to the gravitational zone of the bull weakness percentile. This would be the bull strength percentile, okay? And inversely, the weakness and the strength from the bears, right? So 14-day simple still pivoted towards the upside. Very good. Notice here on the 8 hour that we absolutely have an upside pivot from that RSI signal, and we're starting to pivot towards the upside on the 14-day simple of the 8 hour. Okay, now notice the buy daily using a very important support from that 14-day simple and bouncing straight from it. Remember that we have not even seen what this is going to do based on the after hours price action, because the everything from daily and up hasn't seen the after hours. Only 12 hours and down has seen the after hours. Okay, so and now notice that the 3-day is before the price action on the after hours, it was already facing the resistance right at that 14-day simple. This is a pretty good indication that we may actually succeed the top side of the 14-day simple because we're already curving the 14-day. Okay, so that's a very good thing too. Another thing to notice here is that very likely this 5-day could have found some type of resistance from that 47% move to the upside. Okay, so what I'm saying here is that all of these shorter time frames could be the influence. All of these shorter time frames, upsides, could be the influence for all of the upper time frames to suggest a continuation to the upside. Okay, so let's just kind of keep an eye on this and see what the next moves could be, because I mean, if we are suggesting a continuation to the upside, then the most obvious target to look at would actually be the space between 1301 and about 1435. Okay, so just to kind of you put things as clear as possible there, right? So but yeah, and if it does just happen to fail out of nowhere, then don't actually be afraid too much, because it would just come back to the newly converted support, right? It used to be a resistance from our triangle, but then we actually still haven't validated that support, but it doesn't always have to happen. It's actually not a requirement for this to be. Plenty of times this thing has actually just this formation has actually seen a breakout and continuation to the upside, right? So it's just following very traditional rules, though. It is breaking out from the 65% to the apex. It is meeting the triangle objective already, right? All of those signals are very bullish. Okay, so let's just go ahead and keep an eye on Mullen and see what the days come in. Please, I'm just going to go ahead and remind you one more time, we still have a couple seats left for the ArcMasters trading course. Find the email in the description below. The first course is the first week is actually just going to be the reasons why we are trading. So nothing really in technical terms. So if you would like to still sign up, I will be providing all the recordings for the lessons after the lesson, right? So that you can go ahead and review them. So if you are late and you are just coming into the second week, then you will absolutely have access to the first lesson too. All right. So with that said, guys, please remember that first and foremost that I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. Okay. I need you to do your own due diligence, and everything will be cool. All right, guys. But with that said, I wish you well, a very good rest of your weekend, and I will catch you at the bell on Monday. Adios.